Well, still with closing trades right here at 80 now, and look what a fabulous rally and a thumbs up coming in for budget 2021 by the market. So we're counting down 600 plus points on the Nifty. 14,350 is what we're nudging right now. And to think of it, we had almost gone back to those 13,700 levels start of today's trading session. From there, it's a 600-point move after a lot of chop and churn that came out. And finally, once the dust of the budget and the fine print seeped in, you've seen a one-way up for the markets. 4.6% higher for the Nifty futures. Solid market breadth, only 11 names standing to the declines within the F&A universe, and private banks taking the charge. Indusind Bank, ICICI Bank soaring with double-digit gains for themselves. RBL Bank holding up 11.5%. Chola Finance up 12%. Ashok Leyland up 11.5% as we speak right now. Bajaj Finzer, SBI up almost 10%, HDFC, L&T, UltraTec Cement, Shree Cement. I can go on with the list of gainers. Let's welcome on board then Sunil Subramaniam as well to dissect what Budget 2021 entailed for the markets. Sunil, hi, afternoon. And what an afternoon this is turning out to be. Last 6 days almost seem like a bad dream, Sunil. What is it that the markets have liked? Or would you say that because we went in so light and corrective into the event, therefore this relief rally?
Partly that, but also partly, if you just go back, now you guys had got me to record my budget wish list. And if you just go and rehear that recording, you'll find that 75% of what I asked for, she's given. Okay, so what are these things? I think the key is that you're right, that the week, the run-up, market was very apprehensive because bad news is bad news, right? While market discounts bad news, what is the impact on the budget? Is it going to lead to a very conservative budget was a fear. I think the first thing the finance minister has done is boldly take the fiscal deficit up to almost 7%, right? That's, I think, a very challenging task. She's taken the bull by the horns. The second is, you're taking the fiscal deficit up, right? Where are you going to spend it? And that's why she's, again, made a very smart choice by increasing the infra allocation, the capex allocation by 35% to 5.5 lakh crores. So the quality of the expenditure. So first is, she said, I'm getting money in my hands by widening my fiscal deficit estimate from a typical. Second is to quality of expenditure. The third is that what are the problems in financing growth, right? So if you now look at the country, that bad bank proposal, right? I think what that proposal, if it's really implemented, because it's been kept on talking, finally there's a concrete action that we'll set up an AMC and we'll then put it transfer to an AIF. So imagine the burden lifting if real incorrigible bad assets are going to be taken and sold at a discount. I think that's a huge plus. Fourth is to target the foreigners. They were not tied around sovereign wealth funds, they've removed that. They were not tied around retirement funds having double taxing, they removed that. They were not FDI in insurance. Insurance, as you know, is very capital intensive. And they've allowed not only FDI to 74%, they've allowed control with certain conditions to foreigners on insurance. So your insurance sector is really going to explode now. So if you look at it, that the reform-oriented path she has maintained, even in a year of distress, not get frightened by the whole situation around us, and still stuck to the path of growth. And she said that we will target the FRBM in a slightly delayed fashion. So I think if you overall look at it, I would say that the preparation of the budget has been excellent. Right? And then there was a fear that somewhere a COVID cess would come out. That fear was also dominating, and I would attribute that the market correction to significant amount, where the foreigners, FPIs will also have to suffer the COVID cess. By not putting in any additional taxation, right? That's been a big relief. And I think that's where the market is voting with its feet today. So I would say that I would rate this budget at 8.5 out of 10. Yes, there's still stuff which you would have liked her to do. So I would not give 10. I'll say 8.5. But the market's rally is partly because market had discounted the budget, saying she can't do all of this.
Fair point. But Sunil, has the market, or rather the budget, done enough for the FIIs to come back? We've seen a consistent sell-off in the last 6 trading sessions, and as of Friday, it was a high figure, highest in the recent history of 5,900 odd crore rupees. Could, after the budget today, FIIs turn back to buying India equities?
Look at the composition of FIIs, right? there is one sector of hedge fund, but there's also pension funds, retirement funds. So she's given a break to those retirement funds in terms of taxation. Second is that all this reform is actually going to translate in FY 22, 23, 23, 24. So FIs or long-term FIs would definitely view this as saying India is back. It's probably going to be the fastest recovering economy. And then one more number, right, is the pragmatism of the finance minister in terms of projecting only a 14.4% nominal GDP growth. Now with inflation at 4.5 to 5, you're talking about a real GDP growth 9 to 10, when everybody's expecting 11. So I think she's been conservative on that front too. So it's not that the fine print is revealing very negative reprises on the basis of her assumptions. So I think the foreigners will get comfort from the fact that these numbers are based on fairly realistic assumptions of a bounce back and not in the air.
Okay. We actually have the Finance Minister's press conference about to begin as well. Sunil, would you be looking at any fresh spots given the budget this time around, the increased outlay, particularly when it comes to infra, for example, other pockets that you feel may stand to benefit this time around? Any new opportunities or any reallocation that you'd be looking at?
I've always been a bull on cement, as you know, right? But in the recent months, as I said in my previous interviews, we were not adding on to cement, we were just holding our positions. But now I think it's time to add back cement on my books in a big way. So I think cement and steel and EPC contractors, because all of this infrastructure is going to mean a lot of order books. So I think that's the broader play which we will start adding back on, which you're already overweight on, we'll probably increase that. Second is auto. I think the scrappage policy and all that has come through is also good for the auto segment. So